rising yields are a big part of the picture for the stock market. Maybe today they are the picture for the stock market. So let's get to Rick Santelli in Chicago for more on the bond market, rates, and sort of everything that we just talked about.
Yeah, I don't know. It sounded like a lot of excuses what I was listening to at that last panel. Listen, I think it's pretty simple. We could argue that there's a lot more growth in the economy than many would have expected, and obviously that's probably showing up in rates, and how it shows up in stocks can get confusing. But the other issue is sticky inflation. We could walk around it, talk around it, but the reality is the Fed really didn't have it under control in terms of what they believed was coming down the road, and that has cost them. The markets priced in part based on their guidance, which was incorrect. Now, there was a big thing going on today. Look at 2s, 10s, and 30s on one chart. And remember, pretty much the big news had been long maturities leading rates higher. And if you take a weekly perspective, 2s are up 9, 10s are up 15, 30s are up 15 on the week. But on the day, 2s are up 10, 10s are up 6, and 30s are only up 2. And the reason this is important is because we have a bear market in treasuries, meaning price going down, yield going up. And yield curves are flattening, which means that the short end has wrested control of the yield curve from the long-dated treasuries because of that exact discussion you were having. The markets are coming more in line with the data, and the Fed can make any excuse it wants. Look at the data today. Not only were jobs hot, look at University of Michigan sentiment. You look at the 1 year, it moved from 2.8 to 3.3, the 5 to 10 year from 3% to 3.3. These are important, and it doesn't get lost on many investors. Now, if you look at the yield curve for the week, you can see how it was steepening, 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 and boom, today it changed. You really want to pay attention to the next several sessions of that dynamic. And it wasn't only in 2s and 10s. Other yield curves, like 5s to 30s, had like a 10 basis point move. That's a big move. And finally, the dollar index is definitely the good news embedded in this story because it is on fire, hovering at the best level since the fall of 22.